Hello, it is Evan here from the Trade Risk, and before we jump into this week's market analysis video, I want to highlight a sale that we have going on right now at the Trade Risk for 4th of July for Independence Weekend. We are running a sale basically on everything on the website. So all of our trading systems, Merlin, Lamerick, you usually hear me talk about these systems in this video, tell you how we're positioned and what they're kind of up to and holding. Both of those trading systems are 30% off right now. You can pick either one. They both do very different things, so I encourage you to sort of read about both of them just to make sure they are the fit and sort of signals of what you are looking for, or you can certainly join both of them for a bigger discount. All of those are on sale for 30% off right now, and they've had a really good year of performance right now. They are kicking butt, and we post all of the performance every month, so you can see that. And if you're a TC2000 user, 40% off on all of our scans and indicators. We usually do some trade ideas on Wednesdays every single week. We showcase some of the scans, indicators, price action patterns, trend filters, divergence indicators, all kinds of stuff to help you sort of tactically trade markets. It is a TC2000 scans and indicators store only. Then last but not least, our TR150 watch list. So that is on sale as well. That is a lifetime membership to the TR150 watch list, and it gets updated every single week. So basically, every single week, you get us to do your homework for you, highlighting, presenting stocks that we think are interesting, that we think have all the leading characteristics of big stock market winners. So check it out, thetraderisk.com/sale. That's where you can find this page and learn more about everything that is on sale. The discounts are applied at checkout, so you need to put in the promo code to get the discounts. All the prices listed when you look through these are full prices, and then when you apply the old July 2021 promo code at checkout, you'll get your discount. So hope everybody enjoys. Hope that is helpful for all y'all to pick up some trading tools and indicators to help you trade. And with that, we'll be back in just a second here with our market analysis video. All right, let's jump right into these headlines this week. We had risk appetite into the long weekend. So we've got markets closed on Monday for U.S. 4th of July Independence Day holiday. And we had stock market basically closing at new highs, S&P, Nasdaq really surging to new highs at this point and quite, stretched in the short term. We had the VIX basically falling in line here and supporting this market uptrend. We had new 52-week closing lows in the VIX. We got below 15. I think we closed below 15, maybe not. I'll have to look at the final numbers a little bit later in this deck, but there was essentially, just lots of good movement here for the bull case. And I think last week's video that we titled or at least talked about was the bull market is back on schedule or back on track, or however we phrased it, because if you remember, early last week is when we had the turnaround after a little sort of rug pull, a little abrupt sell-off. Early last week, we had that aggressive rebound, and now we saw just more follow through to the upside this week. So it's encouraging for the bull case. Of course, if you're trying to chase here, if you're trying to establish new positions here, the risk is certainly more elevated than it was 2 weeks ago. But largely, if we look at those longer term trends, shorter term trends, intermediate term trends, they are sort of all pointing up at this time. Bond market also back to its recent trend highs. We're going to talk more about that later in this video. So if we take a look at the numbers here on the week, we did have the Russell. So I guess it wasn't all perfect because we did have the Russell closing down about 1% this week. So it was the only of the major indices to kind of get left behind a little bit. And we still see the Nasdaq out in front leading, and it really gets shown here looking at this 1 month column. So if you look in the middle column here, this is just looking back over the past month of trading, and you can see most of the gains now in the US markets are coming from the Nasdaq 100, up almost 7%, and that is largely that is a large margin ahead of the Dow, the SPY, the Russell, and world stocks. So that is, a trend that is continuing. Growth is back in style, let's say, and it is continuing to work throughout this week. If we look at market internals, market breadth, you can see it was very solid here as well, especially still the number of stocks hitting 52-week highs, 749. You know, that's one of my favorite indicators to look at to measure the sort of intermediate health of the market, long-term health of the market, let's even call it. And that number is still skewing very positive here, almost at the 1,000 mark here for the past 5 days. Cumulative AD line was a little bit light, and that sort of speaks when the Russell is a little shaky and down. Essentially, you're always going to have a slightly weaker numbers here, but still positive for the week in aggregate. And then if we're looking at the percentage of stocks over 20 SMA, it's at 58.21%. If we take a look at the 52-week highs minus lows over the past 30 days, you can see just that trend continues up and to the right. And as I usually say, until and if this changes, it is really tough to want to fight this market unless you're really kind of going in there surgical and looking for a quick multi-day drop, or you're picking your spots very carefully and tactically. Then there's always opportunity for that. But broadly speaking, to say that you just want to hold say an S&P 500 short or a Q short, it's just going to be a very tough sort of road for you when this kind of undercurrent is being sort of at work. So if we look at sector performance here, again, you can see mostly green. We only had one sector standing out, and that was energy to the downside. It was 1.17% lower. Everything else, though, was green. So at the top of the list, technology, healthcare, communication services, rounding out the top three, about 2 to 3% higher. And then on the downside, we talked about energy here, down 1%. Financials were flat. Utilities were flat. And those were your three underperformers on a relative basis on the week. If we take a look at correlation, so there were two interesting sort of correlations that crept in here. And this is where I sort of, again, kind of just reiterate here that this slide is looking at the past 10 days. And so the past 10 days is very, very short, but it does, tell us what's moving together. And the whole point is we do these videos every single week. So we try and stay up to date with kind of the correlations that are going on. And the two that are sort of creeping in here. So the first one is oil. So take a look at the USO correlation to the broad equity market. So basically what this tells us is with a 0.92 correlation to the Dow Jones, to the S&P 500, we've got oil basically moving in lockstep with the stock market. So you could think of that as kind of the oil trade driving a little bit. You can also tie into what the dollar has been doing. But really, when we look at energy stocks, like on this last slide, we didn't really see energy participate this week, despite the fact that we saw oil up this week. So that is one little kind of peculiar thing there. But oil and that correlation existing right now. And so is this JNK correlation to equity markets. So JNK is high yield credit. And that's what the JNK bond ETF represents. It's high yield bonds, and that is moving right now in lockstep here also with equity markets, which isn't necessarily a bad thing, but it is sort of a peculiar thing that I don't necessarily have a good rational explanation for. So I don't want to try and make one up. I just want to sort of present the data as it exists. And if you have any theories or comments to any of this, leave a comment below. I'd also love to read it. If we look at volatility here this week, so yeah, it looks like we got a 15 close. No, not quite below 15 like we were trading intraday, but still, a very low VIX relative to what we've been used to over this past year of trading. And it does resemble pretty much the same term structure as what we saw last week. It's a bit steep here in the front month to the 3 month, but that's been the behavior that we've been really dealing with for a while now as well. But a VIX at 15 definitely is encouraging for the bull case that there is some, sort of complacency to let this market grind to the upside. If we look at interest rates and credit, so we saw yields fall pretty sharply this week. That means bond markets were doing well. We saw, again, JNK high yield bonds doing well this week. We saw investment grade bonds doing well this week. So that's good. That is good for especially technology stocks, which do like the fact that those yields are coming down. Technology tends to do well when the interest rates are not ripping to the upside. If we look at dollar and commodities, the dollar was up this week, so it was 0.5% to the upside. It did give back some gains late in the week on Friday, but still a positive week for the dollar, and that brings it up 2% over the past month. So the dollar still continues its trend to the upside. We did see gold and silver up this week as well. Nothing too sharp there, but still, kind of hanging in there. They had a tough week, about 6, 7, 8 days ago. They saw a pretty good sell-off, and they are stabilizing now, trying to bounce. Bitcoin down about 4%, so it's still struggling. It's still very choppy here in this 30K to 35K range, looking to see if that can hold its ground around 30 again if it gets back down there and tests. Agriculture, WTI, crude oil, natural gas, all up 3 to 4 to 5%. So some pretty good performance there out of commodities, basically still working, and that's in the face of a rising dollar. Put the report card together, and it was a very constructive week here. You can see check marks across the board. Now, again, this is a good thing on an intermediate term basis, perhaps, but in the short term, we are seeing some stretch signals. We're going to talk about that in part 2 of this video, and we are going to see some, probably maybe a little bit of turbulence on the near term is certainly possible. But still, when we look objectively here at the data, at the marks, we got a solid A for this week's report card. Now, lastly, our trading systems here. So 2 trading systems, Merlin doing pretty much what Merlin's been doing all of 2021, and that is staying invested, riding this uptrend in, kind of growth risk appetites. And that's why it's had a really good year, is because it continues to support this market rally, or to stay involved in this market rally. And you can see it is still almost 100% invested. This Lamerick trading strategy has been all over the place. So 2 weeks ago, we were 100% long. Following that, we went to basically 100% short. And now going into this weekend, it is very much in the middle of the road here and down to just one position. I haven't looked at what the signals are for next Tuesday, but this has been all over the place, very tactically kind of trying to dance with the market here. And right now, it's just not seeing a whole lot, and it's staying pretty neutral, just one position onto the short side. So that is our Lamerick trading strategy. You can learn more about those in the link in the top right of your screen right now. And with that, we'll be back in just a moment here with part 2. All right, we've got TC 2000 open, we've got our equity market grid showing, and we got our smart trend filter applied to this view. So basically the multicolored dots are a custom smart trend filter we've developed. It measures price and volume across time. It helps us determine trend strength, path of least resistance. And then we have price itself as the white dashed lines, and we're looking at a weekly time frame right here. So looking at this weekly time frame, we essentially had no change of character or trend outlook based on this heuristic, this indicator, this model. You can see that the S&P is still bullish green. You can see Nasdaq still bullish green. You can see IWM is still yellow neutral. So we haven't done anything here. We haven't quite budged. Prices above our smart trend filter. Past signal, or the last signal, is bullish, but we still haven't got the clearance sign to rotate into bullish. And that makes sense because we do still see the Russell 2000 pretty choppy right now. So that stays the same. ACWX, despite down 1%, is still printing a bullish weekly trend signal here for international stocks. Now, if we go down to a daily chart, let's look at things a little bit tighter and a little bit closer here. S&P and Nasdaq, you can see these white dashed lines are really just kind of escaping to the top of the screen. So there's lots of price momentum, shows lots of strength throughout this week, and still getting bullish buy signals here on both of these markets as they have been. The Russell is still neutral as well. So we essentially came into the week and transitioned immediately down to neutral. So we came into the week from Friday with a buy signal on this market that transitioned to neutral and then stayed neutral essentially for the rest of the week. ACWX here has been in tougher territory. So ACWX was down 1% this week, but it's been in a sell signal now for the past 2 weeks, about 2 weeks. So you can see we went negative here, bearish on this market on the daily chart back on Friday, the 18th, June 18th is when a sell signal was produced. And we've essentially had a sell signal throughout all of this time. So not a whole lot of change here In terms of trend and trend outlook this week, most of what we had in place has kind of stayed in place. Now, if we take a look a little bit closer at some of the price action specifically, and we take a look here at, say, the S&P 500, and we look at this sort of simple grid that we have been viewing here with just a few horizontal lines, we see the chop. This is a weekly chart, so let's go down to a daily chart. This is sort of what we were looking at here, and you can clearly see the off to the races move that really started to accelerate Thursday and into Friday of this week. Now, a couple of things to note here. Remember, last week we had that title of sort of the bull market is back on track, and that was in reference to this price behavior right in here. So it seems like forever ago, but this was just early last week when we had this abrupt sell-off in the S&P 500. I think we got a lot of people worried in here that we had the false breakout and we were falling back into this range, but you had to act pretty quick because this was the big telling bar here on Monday, 6/21, when you had this 1.5% day that rejected basically a lot of the selling. Then you had the follow through day on Tuesday to the upside, and that pretty much paved the way to where we are now. So clearly, you know, there's a big difference between even buying last week when we gave the signal, when we, you know, had the headline of bull market back on track. That was a much lower risk entry as we started to close at new highs than it is right now. This is a much tougher chase here. It's definitely not a immediate short, because shorting a market that is accelerating to the upside is a very dangerous lesson that I think a lot of us may or may not have learned at this point. But just because we are overbought is not reason enough to sell short blindly. If I throw on some Bollinger Bands here though, and go back to the SPY, you can see that we are closing well above the standard 2 and 20 Bollinger Band here, or I guess this is a 21 day. So let's switch it to a standard 2 and 20. And you can see here, we are still, again, well above the upper band. If we just look back in history here, the S&P 500 doesn't tend to stay above the upper band too long. You can see we popped above it here on Monday, but then this is random Monday, April 5th. And you can see, though, we didn't just come crashing down. We just went sideways for 2 days. We let price take a little bit of a breather, and then we continued to trend higher. So that's a very, you know, strong possibility as well, is that maybe we don't continue to rocket higher next week, but we just base sideways for a few days, let some of the, you know, price action, kind of moving averages, Bollinger Bands catch up a bit, and then, you know, kind of continue the trend higher. So that's something to keep in mind. We are clearly in a stretched sort of quote unquote overbought condition right now, but that isn't necessarily a reason to short on its own. We can start to, when we get these sort of parabolic moves, you can start to look at, you know, more accelerated sort of trend lines that you can start to draw. So, you know, you could use from the lows here up to where we currently are, and you could put some steep kind of channel trend line. I always like to just reference the prior day's lows. You know, are we above the prior day's lows? Then, you know, life is good here still. If we start breaking below the prior day's lows, then, you know, you kind of have your short, you know, your first level to maybe pay attention to and, you know, think about managing risk a little bit. So that's the way I'm sort of looking at this right now. It's all systems go, and, you know, trends are moving higher, and you know, it's time to manage risk, maybe sell some into strength. You can do all those things, put a little trend following momentum filter on your positions, but all in all, enjoy the uptrend. If you're positioned in this market, then, you know, this is exactly what you want to see. If we look at the Russell 2000, you know, this is still what we're waiting to see. If this breaks out as a sort of fresh momentum move in the market, that would be exciting. That would be nice to see if the Russell starts to get going here. Does seem like it wants to get going up here. It clearly had a tough Friday, so it obviously lost some momentum here on Friday, but it's still, you know, a very quick 2% away from starting to close at new highs. So don't let this fall off the watch list. Don't lose sight of it. If it starts moving over 234, then this starts to look pretty good pretty quick. So Russell 2000 still range bound, still choppy, reluctant to break out right now, and we'll just have to keep an eye on it until further notice. And then the Nasdaq 100, you can see this has clearly been off to the races as well. We had all of the growth is dead type of fears and value is going to reign supreme, and that has quickly rotated back to the other side here, where we have the growth trade back on, we have interest rates falling, and dollar that is rising. So all of those things kind of supporting the tech growth side of the markets, and we're seeing that sort of play out. If we do throw, say, Bollinger Bands on this, you can again see, if we go to the Qs here, the Qs are at the top end right now of the Bollinger Band, which is a great spot for it. It's usually a nice trending spot of strength for the Qs when it's up in this position. But if we go to the weekly chart on the Qs, you can see that is starting to inch above the upper 2 and 20. And so that gets, again, a little bit concerning, because if you just look back here, it's very rare, in fact, that the Qs get above the upper 2 and 20 Bollinger Band, and it's starting to do that right now. It's essentially up 6 weeks in a row, 7 weeks in a row. So it is frothy here in the short term. It's a very tough chase, but it doesn't make it an immediate short. So keep that in mind, enjoy the uptrend, and manage that risk responsibly. So that is the overall take there on the broad equity markets. Let's look at the bond markets. Look at TLT here. You can see pretty resilient. So we had a rough last week. Where it was an inside week, but it was down 2.5% here for TLT. And, I think a lot of people left kind of scratching their head, maybe thinking we're, going to start to roll back over to these lows, but that didn't happen. We got kind of the exact opposite that took place this week. We rallied 2% and we're much closer to these highs. So TLT still has a bit underneath it, still wants to trend higher at this point. Let's see how it reacts if it gets back up here. Can it take out these highs? Does it fail at these highs? Does it put in a lower high? These are all things that are going to be interesting here for TLT. And again, I think as TLT moves higher, then it still supports kind of the growth Qs trade that has been working. So TLT, that's the scoop there. If we look at the VIX, which I forgot to look at earlier, yeah, so I guess it didn't quite close. So it did close at 52-week lows, but it didn't quite close in the 14s like I thought it did. So it looks like it got to close over 15. Still, though, this has come a long way for the past year, as it's been kind of grinding lower here with a series of lower peak highs. Every time we've got a little volatility flare up, it peaks at a lower price, and we're back to this 15 level. It seems like a level, though, that the market may want to hang around in, is around, maybe 14 to 17, let's call it. That seems like a good sweet spot for the market, and the market can trend pretty nicely while the VIX is around 14 to 17. So that might be just the new normal environment. It's something that we've been thinking for a while. I remember back in here in May making the calls to, having 14 to 15 VIX or sub 20 VIX basically. And, or maybe actually it was even in March, I can't remember. And I don't like using the word making calls, but certainly we had the thinking and the evidence to sort of suggest we would be in this market environment, and, kind of here we are. So that's what the VIX is looking like, pretty bullish there. And if we look at UUP, which is the dollar here, so a couple of weeks ago, I think posted again, I'll use the word call, but thinking that the dollar could get back up to 25 up here. And so it hasn't, clearly hasn't got up there yet. It had a good week, and it really sort of spoiled a little bit of that week on Friday's action, because we did close pretty abruptly lower, down almost 0.5% just on Friday alone. So it took some momentum out of the wind, took some wind out of the sails, and it did, kind of drop below this peak here. So it'll be interesting to see if the dollar kind of falls back, and that was it. And that was maybe the lower high in UUP. Still thought we would get back up towards the mid 20s here, but maybe, maybe this was it. If we see more selling follow through downside next week, then maybe we've seen the highs for the dollar for a little bit. But we'll keep an eye out. The trend is still up here. There's still some momentum, good up days on heavier volume. So I'm not going to count it out quite just yet. So that is it for major markets. Let's take a look at the industry real quick. So if we look at sectors and industries of interest, we've got these scans that we've built here that sort of point out some interesting things that are going on. The first on the upside is consumer electronics. Let's just go to a weekly chart to look at these. So look at consumer electronics breaking out now of this nice consolidation. It's a new high closing, new weekly closing high here for this industry. If we look at some of the stocks in this, there's 17 names that make this up. So iRobot, you got Apple, you've got Sony, you've got GoPro, and you've got lots of different names in here, but that is all sort of, what's helping support this industry to break out to new highs. We've got drug manufacturers, major drug manufacturers this week breaking out to new highs as well. We've got healthcare plans, not quite getting a breakout to highs, but a slight uptick in volume and kind of moving back up towards the top end of its range after a little bit of a volatile week. And medical supplies, so instruments and supplies here breaking out to new highs this week, slightly heavier volume. And then consumer discretionary, the XLY ETF breaking out to new highs for the first time in a few months as well this week. On the downside, so only thing that's pointing up here on the downside scan is pharmaceutical retailers. So I'm not really sure the big event that went on here that caused this industry to take a dive, but Walgreens, we've got Green Lane Holdings, we've got PetsMed, we've got CJJD, lots of things that I'm not really 100% familiar with, but this is clearly in a tough spot. Probably the Walgreens sell-off, which is maybe dominating some of the downside movement here. So that's it. That is the market recap for this week. Hope everybody enjoys the long weekend, some time away from markets and the extra day to kind of sleep in and hang out with family. Don't forget, we've got the sale going on our website. That's thetraderrisk.com/sale. Take advantage of those prices. Always sort of, I hate to be the bearer of bad news throughout the year. Basically, always get the emails that come through asking if there's any discounts or promo codes, and the answer is basically always no, because we don't really run sales, but we've got a sale going, so now's the time to take advantage of it if you're interested in anything that we have to offer. So that's all I've got. Thanks so much, as always, for tuning in and watching every Friday. Be sure to subscribe to our YouTube channel or stay up to date at The Trade Risk. Have a great weekend. We'll see you back here next week.